What's going on, everybody? I want to make a quick pre-Fed update video. Tomorrow we're going to get Fed decision. The expectation is interest rate decision, that is, and their little monthly report. The expectation is no rate cuts. There's not going to be any rate cuts. We talked about it before. We'll see tomorrow. I'm not going to get way into it because there's just no point. We'll find out tomorrow, and we'll get the numbers tomorrow. Basically, jobs are too good. Jobs numbers are good. Unemployment's too low, and inflation is still a little bit higher than the Fed would like, and we're kind of in like a holding pattern within inflation. And basically, there's a little clip of Powell saying it. Uncertainty is the name of the game here. They don't know really what's happening, especially with tariffs and things like that. So we'll find out tomorrow. Overall, I don't think this matters. I've been making these YouTube videos for a year now, and I've been talking about this for a year. We went through a period of slight cuts. They started cutting a little bit, but then we've basically been at a pause. I mean, I know it's not actually that long, but basically, what is it, 5-6 months we've been at a pause where there's just no change, and we're starting to see weakening signs. But these processes take a long time to kind of evolve and play out, because I wasn't paying that much attention to it, but looking back now, like the financial crisis in 2008 was basically from like 2007 to 2012. So it's like a 4 to 5 year period, depending on when you say it started and ended and kind of things like that. But this is a multi-year process that we're going through here. COVID was one stage of it. That was a never seen before stage that we've had to deal with. But the actual recessionary thing, the market crash, the housing crash people are hoping for, it doesn't happen like that overnight. It's just not a thing. It'll take a while to play out. It's just the machine's too big. It can't turn that fast, and we'll see. Like I said, I don't think it matters one way or the other, not for this month. Fed's not cutting rates. Trump really wants them to cut rates at the expense of, he's talking shit about Powell in his press conferences and things like that, just saying Powell doesn't like him, and that's why he's not cutting rates. Powell's not cutting rates because, yeah, it is uncertain, and if he cuts rates too soon, inflation's gonna ramp back up again. They can't do that. They're aiming for 2027. We're back at 2% inflation, is what the Fed's saying, and they've basically come out and said already for this year, 2026, we're not going to see any decrease in inflation. So we're just going to hold steady at like around 3%, slightly under 3%. We'll see if that's the case at the end of the year, but we won't know until we get further into it. And like I said, it doesn't matter. They're gonna hold it steady as long as they can. Whether, I don't think it's not completely because of that, but I don't think Powell likes Trump, and I don't think that. But I also don't think that really matters in the case of the economic situation. Like I said, we're at like peak uncertainty, and that's where we're going to stay for at least the next 4 or 5 months, I think. And we'll see where it goes from there with the tariff situation playing out, but we'll just have to wait and find out. The only other thing I want to talk to, if you're watching this, you're not from Ohio, maybe it won't interest you at all, but I think there's a more general point here that can be addressed. I was looking into the Ohio elections are today, May 6th. The results will be out tomorrow, May 7th, along with that Fed decision. But the one statewide issue, it's called issue number 2 on the state ballot. And full disclaimer, I'm not voting. This will be the last time I don't do that. I will be voting in next year and everything like that, as I should. But I didn't register or anything, so just take that for what it is. I'm giving you my opinion, but I'm not voting one way or the other, and it's not going to be that big of an impact. But overall, it's an infrastructure funding bill using bonds. So they want to up the amount of bonds the state can issue to pay for this infrastructure bill. The general the specifics of it are, $200 million a year gets spent on this program right now. It has to be renewed every 10 years. They want to bump it to $250 million to make up for increasing costs. Everybody knows, I've talked about it on this channel a shitload. Costs are going up. So $200 million doesn't go as far as it used to a year, and so now they want to go for $250 million. The state will issue bonds. People will buy those bonds. As far as what I was reading, I think they're 30-year bonds, and you will be paid interest over that period, and then they will be paid back after the 30 years. And by the person buying the bond gets paid the interest, but who pays the interest? Who pays that rate out? Taxpayers. So I was reading through the little blurbs they give, the for argument and the against argument, which I do like that they proposed that. But in the for argument, it specifically says this will not raise your taxes. And if somebody knows more than me, correct me if I'm wrong, they say it's already factored into the budget. In my mind, all that I'm hearing is we're going to increase our debt. Ohio is almost $40 billion in debt at the state level, supposedly, from what Google says. And we're going to just bump it up a little more. So $2.5 billion over a 10-year period. We're going to add $500 million from the $2 billion we're already in. Just tack on another $500 million. And then the amount of debt we're in is increased. The amount of interest you're paying is increased. The debt obligation is increased. Somewhere, somebody's got to pay for that because our interest payment goes up. I mean, we can just keep going more and more into debt, and that's the problem that I think the whole country obviously has it, federally, statewide. The states have it. Everybody's living an unsustainable lifestyle. Even you just down to the household level, we have record debt, and that's how everybody's making ends meet is record debt. This is not the way to go. Personally, it's an infrastructure bill, roads, bridges. This is the field I work in. I honestly don't know if I'll directly benefit from this in the sense of like more projects and things like that. But this directly impacts me. I think it's a good idea in general because our infrastructure is falling apart. This is a good thing to spend money on as a government. This is where the government makes sense, in my opinion. Disagree with me if you want. I'd like to hear it. But roads, bridges, other infrastructure, water lines, sewer, basically transportation and infrastructure, that's all good stuff. That's where the government should come into play, I think, that where it can be organized that way. But I took mostly the issue with your taxes won't go up. Yeah, your taxes won't go up, but really will they? Because over time, I guess people, maybe they're factoring in the fact that you get raises every year, so you're making more and more money each year, and then that state tax that they tax you, it becomes a bigger and bigger number, so that's already factored into the budget somehow. But in my mind, I think that debt number that Ohio's in is just going to go up a little bit, and then our interest is just going to go up, and then we're going to have to borrow even more money the next year, basically how the federal government does it, and we just slowly spiral down into who knows where, modern monetary theory, and then it's over. So I don't know. If you're from Ohio, let me know what your thoughts are on the issue 2 thing. Overall, I think it's a good idea. The funding is interesting, and the way they word it is even more interesting, but I'd like to hear what you think. Let me know. Like the video if you got something out of it. Dislike it if you didn't. Like I said, we'll be back tomorrow with that Fed decision, and I'd appreciate it if you subscribe. Come back for more. We'll be here the rest of the week, and I'll catch you guys then.